Hello, and welcome to the M&A Advisors Market Spotlight interview. I'm Andrew Tardona, Managing Director with the M&A Advisor, and I'm thrilled to welcome this year's Valuation Firm of the Year award winner and Managing Director with Valuation Research Corporation, Jonathan Adelson. Thanks so much for joining us today, Jonathan.
Thanks, Andrew, and great to be with you today in the M&A Advisor.
To start off, 2020 was obviously a very trying year across the board. What 2020 can you share today?
Well, 2020 was undoubtedly one for the history books. Looking back, at least we can say that the bear market was by far the shortest in history. After the worst of March and April's dip, M&A activity seemed to have weathered the pandemic remarkably well, and private markets have been taking it in stride, especially during the latter half of last year to present. A cautious eye on the new normal is still necessary, of course. But as VRC closed the year, we saw that even if companies had reduced earnings, they didn't necessarily have reduced value. We work on nearly 600 deals a year, so as you can imagine, we get to see a lot of what's happening with the publics, large privates, and in the private equity and private debt spaces.
Great. And what key items are you watching for in 2021? Are there any shifts that you're anticipating around asset valuations?
At the start of 2021, we are seeing strong multiples. Our clients tell us that their comfort levels are improving around fundamentals, market outlooks, and abilities to weather a second wave of the virus. Both valuation and fairness opinion advisory engagements are also coming across our desks at record volumes. We also see strategics continuing to be acquisitive and ready to invest non-core assets to fortify company stability. And private equity still has dry powder to both invest in and exit solid portfolio companies. We're seeing many of our clients add earnouts or rollover equity into their deal structures, which has served as very useful, albeit complex tools to bridge the valuation gap for both buyers and sellers. There's also been a considerable increase in SPAC activity and frothy valuations driving some IPO mania. Both scenarios require a critical eye from an independent valuation firm for financial reporting and filing purposes. So we and our clients have kept busy on these types of deals and expect to see many more this year. But questions and uncertainty do still hang over the market on a number of fronts. Stress from new COVID lockdowns, the pace of vaccines and how companies can adapt, expected economic tax policy changes from a new White House administration and control of Congress, pending and future government stimulus programs, ongoing preservation of liquidity, and transaction financing. In other words, considering impacts to covenant requirements and increased pricing. All of these uncertainties can potentially affect deal flow and impact valuations.
I know it's still early, but have you seen any swings in complex securities over the last month that may predict some trends for the year? Or how does this relate to hard value securities?
Absolutely. Public as well as private market investors have become far less risk averse in September, and valuations have rebounded materially. Credit pricing and terms in private equity multiples have generally rebounded to pre-pandemic levels, with some in favor industries like technology, healthcare outperforming. The drivers are not all technical, though. Some industries and companies that were materially impacted from the COVID shutdown have had a material rebound in performance as these businesses open back up, and several made permanent cost cuts to improve margins going forward. Many investors, observing that most private companies perform much better than expected, began to put money back into private capital managers who restarted fundraising efforts late in 2020. Private capital managers, in turn, have pivoted from sustaining and a portfolio management focus back to new deal-making activities. Many of our clients reported Q4 deal flow that was on par or better than pre-COVID levels, as well as robust early 2021 deal backlog and pipeline, which is all a good sign. With the COVID vaccine rollout, a stabilized U.S. political landscape, and liquid and expanding capital markets, we expect private investment to continue to expand in 2021 with continued upward pressure on valuations.
Sure. And in talking with your clients, what are some of the trials and tribulations they face relative to decisions and support, particularly around financial reporting standards?
That's a really good question. Scrutiny from internal and external auditors, regulatory agencies, and investors always remain a constant with our clients. And transparency is critical when the balance sheet is under the microscope, which VRC sees regularly. We as a firm take a pretty pragmatic approach to get values right in a way that makes sense and stand up to scrutiny, whether reviewed today or well into the future, which is very important to all of our clients. But regardless of the pandemic, the breakneck pace at which change has been coming from the standard setters also continues for financial reporting professionals. The continued discussions around goodwill impairment are a great example. Our clients continue to look to us as they also manage changes around lease accounting, revenue recognition, deferred revenue, and CECL, to name a few. The SEC Also just finalized Fair Value Rule 2A-5, which is acts to modernize valuation guidance for fund boards and BDCs, which has been of interest of many of our clients in that space. As far as valuation for tax reporting purposes go, acquisition structures play a big role in determining how the tax rules are applied. And as I said earlier, with a new administration, there always comes uncertainty around a new tax policy agenda and how that agenda will impact valuation needs for tax compliance. So because of this, we continue to think it's critically important to include the in-house and external corporate tax team early in the deal process to understand the value implications of a deal and to get ahead of any surprises while minimizing risk and tax exposure. And another layer of tax valuation concerns can arise with cross-border deals, which we're seeing more and more of, where the interpretation of tax rules across jurisdictions need to be considered in addressing valuation issues.
Great. Well, that's all the time we have for today. Thank you very much for joining us, Jonathan, and thanks very much to our audience. We look forward to seeing everyone at the next M&A Advisors Market Spotlight interview, and have a great day.
Thank you, Andrew.